Okay, fine. So I think introduction has been done, so we can start. Okay. Okay. So I hope you can see my screen and you can see the presentation. Okay, fine. So today we'll start with the trend analysis chapter. Okay, trend premier. What is a trend? Okay, just okay. So like before we start, okay, I'll just show you on chart. Okay, what is a trend? Okay, now can anybody tell me what is the trend here?
Downtrend.
Any doubt? Anybody? It's
No.
very simple, right? Yeah, it's
Yes.
a downtrend, right? Two, three ways of identifying a trend, which we'll be discussing, but right now I'll just show you. Like when any instrument, it can be a stock, it can be a currency, it can be a commodity, it works almost everywhere. Okay. When it's making, say, lower highs and lower lows, right? If you can see here, this high is lower than this high, right? You can see this high is lower than this high, right? Right? Or and this low is lower than this one, right? Right? Even this low is lower than this one, right? So once this starts to happen, right, the trend is down in that time frame. Like this is now on daily chart, right? So this the trend is down on daily chart, right? It's till the time it doesn't makes a higher high and a higher low, then the trend will remain in downtrend. Why we can say that? Why this works? Okay, because there's no way that a downtrend can make higher highs and higher lows and go up, right, right, and do and go down, right? Because in a downtrend, it will say every see understand what's happening here. Right? Every rise is sold into, right. This is a rise. It got sold into. The move in the downside is bigger. Okay, if you see this move is bigger than this move, right? This move is bigger, okay, than this move, right? That is why the instrument is falling, right? This move is bigger than this move, right? This move is bigger than this. This will be 100%. This will happen. There's no denying on that. Okay, this is going to happen in a downtrend, right? So you tell me that if you're buying this instrument, no, whatever is the name doesn't matter. If you're buying this instrument, okay, will you make more money by buying it, or will you make more money by selling it?
Of
Selling it.
course, by selling.
Selling it, right? Because the if you see the move from 800 to 720 is bigger than the move from say 740 to 800, correct? Right? So it makes sense to sell it, right? Same way, the move from say 920 to 800 approximately, right, is bigger than the move from say 880 to 920, right? Right. So if you are with the trend, okay, it's always said in technical analysis that be with the trend. Why we say be with the trend is because of this reason, that your profit will be bigger on the side of the trend. If the trend is down, it's better that you be on the side of the downtrend, right? Buying this stock in a downtrend, trying to catch the bottom, like If we didn't knew, right, like here, we would have thought that okay, the bottom as we made it, it is already, it is at say this stock got listed, right, say recently in December 2024, right, and we would have said that okay, it's uh, it's at 52-week lows, yeah, like at this point, okay, when this candle came in, okay, it is at 52-week low, so we will think that okay, we are getting it cheaper, right. If we don't know this, right, as of now we don't say know what happens in the future, right. So here we'll be thinking okay, we are getting it cheaper, right. It was got listed somewhere around 1400, and now it is at 1000 levels, so it's cheaper. But in market, it doesn't, this buying cheaper doesn't works very well, right. You bought it and it went down to even further, right. So let it complete this lower high, lower low formation, okay, and then you can buy it, okay. It can be a great company, Tata, the XYZ, whatever, okay. But if you buy this stock, you would not make money in this as of now, right. You would not have made money in this stock, right. So let it go wherever it wants to go. We don't know it from 1400 it has gone to 700. We can say that okay, 50% correction has happened, right. But whether it will correct even further, because another important thing for you is to understand is that whether you bought this stock at 1400 or 1400, or you buy it at 5 700, okay. Let me make this thing very clear to you, okay. Say if you have bought this stock at say 1400, okay, and it went down to 700, right. How much you lost? You lost 50%, correct, approximately I'm talking about, right. uh this divide by this to 100, right. Okay, this, we have lost 50%, correct. So suppose you would have bought say this stock say for 10,000 rupees, correct. Okay, you bought it for 10,000 rupees. How many shares you got? Okay, 10,000 divided by 1400, right. You got 7 shares approximately, right. And say suppose you buy it now at 700, right. You buy it now at 700, same 10,000 rupees quantity you buy, okay, at 700, okay. So you will get 14 shares, right, approximately this divided by this, correct. You got 14 shares. But if from 700 it goes to 350, it goes to 350, suppose, right. Your loss will be 50% only. You would have lost 5,000 rupees in both the cases. Am I correct? Am I correct?
Yes, sir.
Yes,
Right,
sir.
in both the cases you would have lost 5,000 rupees only.
Yes, sir.
So buying cheap, like, is not the right way of doing things, right. In markets, like, this strategy will work if it's a bull market, but you never know when the bull market will turn into a bear market, right. Every time a correction will look like a correction, but it can be a reversal. Like, as we go forward, I'll show you that also, okay. So don't have that mindset that you have to buy cheaper, okay. Understand, anything which is expensive is for some reason, right. And if it is cheap, it is for a reason, right. You may not know that reason as of now. Okay. So this thing, I wanted to make it very clear at the beginning only, that buying cheap is not a great thing. It is good for fundamental analysis, agreed. Okay. But then also, along with fundamentals, if you add technicals, you would have not bought this stock, right? Because it is making higher lows, lower highs and lower lows, right? Just for example, right? So the trend is down here. Now let's take another stock, okay, which is in an uptrend, maybe Bajaj Finance. Okay, yeah. Now, what is the trend of this stock? Very clear. Any doubt in this?
Absolutely, no doubt.
Uptrend, right? No doubt, right? Here. Right. What is happening here? Again, the same thing, right? The the move on the upside is bigger than the move on the downside. Very clear, right? Then only there will be an uptrend. Uptrend cannot happen with a bigger move on the downside and a smaller move on the upside. It's not possible. Okay, it's totally not possible. Okay, it's impossible to have bigger say lower lows, okay, and lower highs and having an uptrend. That's not possible. So it's fundamental basically, right? Here again, if you see, bigger up move and smaller down move, right? So the trend is up, right? So this is something which you have to buy basically, which is showing strength. Now we know that the entire market is falling, this stock is rising. Now this can also fall, I don't say that it will not fall. Okay, it can also fall, but the probability of a stock working is more when it shows strength against the trend, against the market, general market, right? Now there's no strategy which will all the time, so it can also fall, right? If there is something like COVID or something like that, any and every stock will fall. Like right now, also this is a situation where almost every stock is falling, right? But basic idea here I was to say was that if you are with the trend, like in this stock, if you are long, there is a higher probability that you will make money. The probability of making money is also higher, and the size of the profits will also be higher, right? If you're buying this, then your profits are bigger, right? Your risk is also less because it is falling less, right? So your risk is less, and your profit potential and profit probability is also higher, right? So that is why trend is the most important aspect of technical analysis. If I have to rename technical analysis, I will name it as trend analysis. That's it. Okay, so there are a lot of ways of making money in the market, right? Using technicals itself also, right? But trend is something which is the most useful thing. Okay, and one should always focus on the trend. Like there are other ways like catching the bottom, catching top. All those things are also there with which you can make money. No denial out of that, right? But the best thing is to go with the trend. Okay, and trend will show up only when it shows up, right? So how will you know that this trend is on the upside, right? So it has to make at least one higher high and one higher low minimum. That much is the requirement, right? Like here if you see, it gave a breakout, right? We gave a breakout, and then this low was not lower than this, right? So the trend was higher, trend was up, right? So you have to have, so you will not be able to buy if you're using trend analysis. That is I said at the beginning, right? That you will not be able to buy here, right? This was the bottom, at least what in our chart, what we can see as of now, right? This is the bottom. So you will not be able to buy here because the trend was still down. If you see, before this the trend was down, right? It was making lower highs. This high is lower than this, right? So the first instance of having a higher high and have a higher low was somewhere here. Like this was the higher high, this is a higher low. Okay, so you will not get anything before this, right? If you're using trend analysis, right? So expecting that will be a problem. Okay, let's come to the content now. Trends in the price movement. What is a trend? Basically, a trend occurs when prices move persistently in a specific direction. So basically, when the price move in one direction, it can be up, it can be down, it can be sideways also. Sideways is also a trend, right? Where neither the highs are getting broken nor the lows are getting broken. The price is in a consolidation in a range, not doing much. Sometimes it may break out little bit, one bar here and there, but it may not sustain those levels, right? So a false breakout may also happen in a sideways market, right? But it is persistent, like it is for some time in that direction only. So up, then it is continuing to be up, down, then it is continuing to be down. If the trend doesn't persist, then it's not a trend, right? Then it is sideways market, because in sideways market you will see no trend. Okay, not necessarily linear, but much shows consistent. movement. So the trend may not be like every bar is up. That doesn't happen, right? Every bar like this, if you see, okay, here if you can see this, almost every bar is up, right? This is also a trend, but you cannot expect this to happen every time, right? If you see in this downtrend, not every bar is red, right? There are some bars which is green also, right? So uh, it doesn't needs to be that every bar is of one color, okay. There can, because in trend also there will be some levels where some profit booking will come, right? If anybody has shorted this stock, right, then he will like to book some profits after the recent profit, right? So because of that you get these bounces in between the trend also. Yeah. So once we understand that trend are useful for us, we need to identify, right? Identify them, right? Trends can be analyzed by observing price charts, so we can see the price and we can identify the trend, right? Just by seeing the higher highs, higher lows, lower high, lower lows, or similar highs, similar lows, we can identify the trend, right? Okay, so simplest way is to see the peaks and troughs. Okay, basically that are high and lows help define the trend direction. So you can by seeing the high and the lows, you can see the trend, right? You don't need any tool. Just by seeing the chart, you can easily say that the trend is up or down, right? That's the simplest way of doing it. But there are other ways of also identifying trends. Like if I put a moving average, right? Uh, Say if I put average, simple moving average, okay, say around say 50-day moving average, okay, right? If the moving average is moving higher, then the trend is up, right? Right, or we can say that if the price is above the moving average, then the trend is up, right? So you can say that the trend is up in this case, right? Same way, if I go to the same previous chart, Tata Technologies, okay, Tata Tech. Okay, you can see that the 50-day moving average is moving down, right? The price is below the moving average. So this is also telling us the trend, correct? Yeah. So moving average can be used to identify trend. Uh, Higher highs, lower lows, that can be used as to identify trend. Another tool to identify trend is basically your all the moving averages, exponential moving average, all moving average will work. Okay, some will give you little better signal, some will give you little delayed signal, but all of them will work. Okay, so there's not. I'm not going to show you each and every moving average as of now. Okay, I'll just show you another tool which is called the linear regression. Okay, so linear regression will also show you the trend. I'll remove the moving average, linear regression here. This one is not working. Yeah, I use the same period, 50 period. Okay, little thicker so that you can see it. Change the color to maybe blue. Okay, so you can see linear regression is also showing you the trend, right? The direction of the moving average is so the linear regression is down, right? This is a moving linear regression. We will be studying all these going forward, and there is say yeah, this is say 50 days. I'll make this 20 days. Okay.
Sir,
You
indicator
can
are
see.
the parts of the curriculum, na? We will read in
Yeah, yeah,
curriculum.
yeah, yeah. It will
Uh,
come.
uh,
I'm just showing you some of the tools to identify trends. Yeah.
Sir, and what the software you are using?
I'm using a software called Ami Broker. Okay, but all these tools are available in TradingView, Charting, Optima. Okay, all and whatever software you use, all these tools are available on them. Okay, there's nothing say only specific to this platform. Okay. Okay, so this can also tell us the trend. If I go to say Bajaj files again, you will see that that will also show the same thing. Okay, you can identify the trend. Yeah, trend is up, right? Clearly. Okay, so it will not matter what tool you use. Okay, some tools work little better. There will be a little bit of a difference. Okay, don't expect a major difference. Like if I'm using exponential moving and I'm using a moving simple moving average, there will be a vast difference. It won't make a very big difference. Like people give a lot of importance to tools. Tools are not to be given that much importance. The major importance is to be given to the time frame. The major importance is to be given to the periods, okay, that are more important than the tools itself. Okay, so this is an example which they have given us: higher highs, uh, higher lows, higher high, higher low, higher high, higher low. Right. Each time in this case also, if you see, okay, the up, since it's in an uptrend, the move on the upside is bigger, the move on the downside is smaller. The move on the upside is bigger, the move on the downside is smaller. Same thing you'll see every chart, no matter what chart you take out, it will not be different. Whether it's a currency, whether it's a commodity, whether it's a equity, nothing. Okay, it's an option chart, whether it's a futures chart, doesn't matter. Okay, all charts will show you the same thing. Okay, so don't understand this thing, that it's not possible to move up for a stock without making higher highs, and it's not possible for anything to move down without making a lower lows and lower highs. It's not possible. Short term it can do that, okay, but long term it cannot do that. It's not possible. Okay, downtrend also, if you see, okay, lower highs, right? Lower lows, lower high, lower lows. Okay, everywhere you'll see lower high, lower lows, lower high, lower lows. The move on the downside bigger than the move on the upside. Right, same here. The move on the downside bigger than the move on the upside. Move on the downside bigger than the move on the upside. Move on the downside bigger than the move on the upside. Right, this will be consistent everywhere, no matter what. Okay, and then there's something called sideways trend. Right, where prices, if you see, are not making higher highs and higher lows. A little bit of higher high, lower low can be there. Like here, if you see, there's a top here and similar top here, similar top here, similar top here. Like, so this is sideways market. There's no trend whatsoever, right? So if you see, whatever stock it is, the lower range is around 45, and the upper range is around 55, right? Around $10 move is there. $10 on a 50 rupees stock is how much? 20%, correct? So in this case, your profits will not be more than 20%, right? Because if you buy, say if you short at the top and buy at the bottom, even if you have shorted at the top and bought at the bottom, again shorted at the top, bought at the bottom, maximum profit how much you will make? 20%. Is it possible to make more than that? No, right? But if you see this, the previous chart, okay, the first point where we got a lower high and a lower low was say around 85 levels approximately, right? Okay, it went down to 44. How much is move from 85 or 88 levels to 44? How much percentage move is that?
50%.
50%, right? So when you are trading with the trend, right, you are getting bigger profits, right? 50%. Even if you are making like every top and every bottom also you catch, you will still get 20% in each trade. Here you're getting 50% in one trade, right? So it's up to you what you want to capture, right? Sorry. Okay, and in an uptrend, if you see, say this is at around 20 rupees somewhat, say 10 rupees. Even if I take the first identification of a trend, say this breakout came at around 16 rupees or $16, right? So from $16 it went down, went up to say around 22. How much percentage move is that? 16 to 22 approximately. Still more than 20%, right? Okay, so the profits will always be more in the direction of the trend, in identifying the trend, then identifying sideways market, right? You can get say such moves, right? So once you know that the stock is in a range of say 54 to 45, in that range, okay, each time it comes to this support level you buy, each time it comes to the resistance level you sell, still you'll get only 20%, 30% more, not more than that. right? But in trends, you can make much more, much bigger money, right? If I show you an example, let's see, any stock you say. Okay, because if
Reliance.
I show that I can be
Sir, Reliance.
biased, right? Okay, Reliance. Okay, Reliance. Yeah. The first identification of the trend would have been somewhere here, right? The first genuine identification, I would have said, would have been somewhere here when it broke these levels, right around. It's a clear breakdown, right? You can give it a name of a head and shoulder or whatever name you give to the pattern. Okay, that's not important. But the first identification of the breakdown was somewhere here, right? At around, say, even if I take the low of this candle around 1400 levels, right? From 1400, even if I take that, I exited, say, suppose somewhere, say, at these levels somewhere here, right? At say, 1280 levels also, right? So this was a decent move, right? And if you see right now it is at 1200, so 1400, 1200 is still 200 points. It's still not a very big move, okay? But if you see, okay, if you see this move, right? This was, say, around, say, 1100 to 1400, 1500, almost 50% move, right? So in trends you will get these bigger moves, like if I take from the top, it is almost like a 40% correction has already happened, correct, right? So money, more money you will make in trends. Like if you see, this is 1000, this went to 1600. Okay, even if I say that the first identification of the trend would have been somewhere here, right? Some sort of a breakout happened here, right? Even if you have bought at 1100, it went to 1600. That is also around 500 points move, which is around, say, 45% or something. In sideways market, even if you catch the tops and the bottoms, if you have, say, caught this, say, if you have shorted here at around 1300 and bought it around 1100, you would have got again 20%, right, approximately. Even if you have bought at, say, 1100 levels and exited at 1300 levels, you would have made 20%, right?
Sir,
Yeah,
so break of structure, how do I identify the break of structure normally on the charts? I don't know.
breakout, right?
Break of structure.
Breakup, what is breakup?
Break of structure. Like here it is, you're pointing, जहाँ पे consolidate हो रहा है, and then
Mm-hmm.
again starts making a higher high and higher low. So
Right.
there's, I mean, I follow trading view, तो वहाँ पे algo smart SMC अगर algo concept होता है तो उसमें वो break of structure भी दिखाता है. So is it applicable over here also?
I'm not sure what do you mean by breakup structure. What I am talking about is breakout.
Breakout, okay.
Okay, so breakout is basically a break out of a consolidation, right? If you see here, yeah, there is some sort of consolidation here, right? There is a top here,
Yeah.
right? Within this range, the price has spent some time, right? And then there's a breakout on this candle. If you see, it broke this high. This was the
Okay.
previous high, right? Here it broke this high, right? So this is what we say a breakout, right? Going forward, we'll be talking a lot about these things, okay? But this is basically a simplest form of a breakout,
Okay.
right? Some
Yeah.
sort of a consolidation and then breaking away from the high or from the low.
So, sir, on which time frame we should see?
See, time frame is not important.
Okay.
What is important is that how much profit you want to make. Okay, if you want a small profit like a 10%, 5% move, then go to lower time frame like a, say, a 30-minute or a hourly chart. Okay, but if you want a bigger profit like a 40%, 50%, then go to a higher time frame like a weekly chart. Okay, and identify a breakout of a higher time frame, say a 6 months breakout or a 1 year breakout, then you'll get bigger profits, right? So it
Okay.
is up to the trader. Breakouts are happening everywhere. Okay, They are happening in 5 minutes chart, they are happening in 10 minutes chart, they are happening in 30 minutes chart, they are happening in weekly charts. Right? The bigger the chart, the bigger will be the profit. The smaller the chart, the smaller will be the profit. But again understand, the smaller the chart, the smaller will be your risk. The bigger the chart, the bigger will be your risk. Right? So you have to decide how much risk you want to take and how much return you want to take. Based on that, you'll have to go to a higher time frame or lower time frame, whatever. Got
So I've
it?
also noticed that these patterns, the breakout patterns on smaller time frames, are much less reliable than longer time frames, and it
Correct.
becomes difficult for a derivatives trader to trade smaller time frame charts and breakouts.
Yeah, 100% you're correct. Okay. Say, understand one thing. When you go to lower time frames, see, uh, let's talk about stocks as of now because that is my forte also, and that is what generally most people are also interested in, right? So, say stocks or anything, commodity or stock, whatever it is. Okay, they are open, say 6 hours a day, correct? Approximately 6 hours a day. But every minute, every hour, there's no news coming in of that particular stock. Correct? Reliance is getting traded every minute, right, for 6 hours, right? But there's nothing substantial coming out of Reliance every minute, every second, every 30 minutes. Correct? Right? But the price is moving. Somebody is buying, somebody is selling. Correct? Because the market is open. So say breakouts are what are breakouts? Basically, they happen because of some information. Something has changed. Then the breakout will happen. If it is a good change, then the breakout may happen on the upside. If it's a bad change, the breakout will happen on the downside. Right? But this change is not happening every minute. But the market is getting traded every minute. Correct? So that is why if you go to lower time frame like a minute or a 5 minute or a 10 minute, since nothing is happening in those minutes, okay, there will be false signals. Correct? And if you go to higher time frames, like once in a month, some news may come in, which is important. Once in 6 months, some news may come in, which is important. Some new treaty is being signed, some new product is being developed, some innovation has come up, whatever, right? So these things don't happen every minute, every 10 minutes, every 130 minutes, right? So that is why there is a lot of noise in lower time frames, right? And that is why you get a lot of false signals in lower time frames. But the advantage of lower time frames is also there, is that your risk is also smaller, right? If say if the breakout happens and it falls, it's a false breakout, then say if I say let's talk about daily time frame only, right? So say if I bought here, suppose that I see that this is a breakout and I bought here, right? So my risk is how much? I am buying at say around 1160 rupees, right? And this is suppose is my stop loss, right? 1124. So 1160 to 1125, say how much?
Less than 2%.
30, 31 and 5, 37 rupees, 36, 37 rupees risk is there, correct? So my risk is smaller, right? But if I'm buying say a weekly breakout, right? This is monthly, this is daily, right? If I'm buying a weekly breakout, right? And suppose I take say this breakout, suppose this breakout, right? So I'm buying here at around 1370, and the say my stop loss, there's no major stop loss right here. My stop loss is at 1139, right? 30 around 1130, right? So my risk is also higher, right? I'm entering at 1370 and I'm keeping a stop loss of say 1130, right? So this is a bigger risk than what we got in daily time frame. So as our time frame increases, our risk increases. But if it would have made, it would have been a more bigger profitable trade also, right? If you see from here, from 1370, it went to 1600, correct? So your profit also was bigger, but your risk was bigger. Got it? So you have to decide what time frame you are going to trade. If you want lower risk, okay, and are okay with more whipsaws because of noise, then it's your choice. Okay. If you want to say no, I don't want to have a lot of whipsaws. I want few trades. but more accurate trades, then go to higher time frames. As simple as that.
So, sir,
It's very
can we
simple.
understand in this way that a longer time frame cannot show the real picture? Is it, sir?
No, 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 it's not that. In fact, longer term time frame will show you the real picture. Shorter time frame can give you a lot of failures, wrong picture because of noise, right? Longer time frame will show you a bigger, better picture, but your risk is also higher in that. Understand that, right? Because if it's a false signal, then you will have a bigger risk because your stop loss will also be bigger. Correct?
Sir, so the chart pattern in daily and the chart pattern in weekly are tired differently, sir. I mean,
Sorry,
how to
can
read
you repeat?
the chart pattern in daily and the chart pattern in weekly of Reliance is very
Mhm.
different. How to read it? Like, what should we read to get the exact picture of Reliance?
That you will learn slowly. It's just the beginning right now, right? Okay, I'm just showing you the basics as of now. Okay, give it some time. Okay, and then you will only tell me that okay, this is giving us this pattern, or this is giving you this thing. Okay, you will only tell me, right? You'll have to give it some time. Okay.
So we will get it to know, na, sir.
Yeah, yeah. Ultimately, understanding will be yours, but you will understand it slowly, slowly, right? And we have not gone to patterns and all that. I don't think Mithil has gone through the patterns and everything as of now, right? Okay. So we did this. There are three types of trends. Basically, we understood that uptrend, where you will see higher highs and higher lows. Okay, a sustained general direction is up, right? Downtrend will have lower highs and lower lows. Okay, the sustained general trend will be on the downside. Sideways market will be also known as consolidation or trading range market. Okay, where highs and lows will be at almost at the similar levels only. Little bit up and down, it can give false signals here and there. Okay, and that creates a horizontal load, a horizontal zone of price movement. So you will see that prices are sideways. Like let's see horizontal market. Okay, what's the market doing here? More or less at the same levels, right? It ranges somewhere in this, right? Yeah. So it gets registered somewhere around say 260 levels approximately, and say bounces from 220 levels. So if you see, this is somewhere in 2009, June 2009, and till somewhere here, right, 2011, right, April 2000, almost 2 years. It remained in this range only, right? This is weekly, right? If I go to daily, you will see it even more clearly. You can see this is a horizontal market, right? It's like a line shade 40 rupees. That is like around 20% range, right? That's it. Okay. Generally not going below 220 or 200, and not going about 260, right? In that range only it is there. This is basically like a horizontal zone, correct? Primary price movement and the fractal nature of trends. So trends and these patterns all are fractal in nature. Fractal means that they repeat themselves. Okay, in the same time frame also and in different time frames also. Okay, so you see that this sideways pattern happened, right? And if you go to say even lower time frames, you will see similar patterns in lower time frames also. If you go to higher time frames also, you will see these similar patterns in the higher time frames also. Same way you will see trends in all the time frames. Like if you can see here, okay, there's a strong trend here, right? This is happening on daily, right? You can see a strong trend which happened, right? And again, if you see, there's a strong trend which happened, right? If I go to weekly, then also you will see similar things. Okay, you will see strong move here, right? Downtrend. I'll just show you downtrend because this is what we saw, right? This was what we saw in daily, right? Same thing you can see here also, right? On weekly also you'll see the same thing. Okay, on daily, on weekly again you'll see the same thing. Okay, same way you can see up move also. There is a strong up move in weekly. Okay, and again same big move happened in weekly, right? It will not be exactly the same, but you can see moves happening. And same way there are patterns, right? Say, let me show you a small pattern. So basically, this, if you see, is a rectangular pattern, right? So this is called rectangle, right? Um, Almost similar highs, almost similar lows. So this is a rectangle pattern, right? This is happening on weekly time frame. If I go to daily also, okay, you will see similar pattern in daily as well. Won't be the exact same. Okay, okay, right? Same pattern, rectangle within the same range, is within a range. Same way you can see there is a triangle pattern here. There is a triangle type of pattern here, right? This is you are seeing in daily. The same triangle pattern you will see it on weekly also, right? Or let me show you on monthly, right? Triangle pattern monthly, right? So all these patterns will are factor in nature. You will get them in different time frame and different securities. You are getting it in Reliance as of now. Even if you go to other securities, you will see, if you see, this is a triangle pattern, right? If I go to some other security, maybe say Tata Steel, right? Here also you'll see the same triangle pattern. That is why we say they are fractal in nature, right? This is also in monthly. If I go to say weekly and I go to Oro Pharma, okay, same triangle happening in Oro Pharma on weekly, right? So you will see same patterns everywhere. Okay, so that is basically why we call them fractal in nature. They happen in multiple time frames. They happen in multiple securities, and we have shown you just the equities, but you will see the same things in commodities also, in future forex also. Everywhere you'll see the same patterns. Okay, the three primary movement of price is as per Ruya. Robert Ruya was the follower of Charles Dow. Okay, after Charles Dow, uh, um, the Dow Jones magazine. There was a no, sorry, no, Dow Jones newspaper was there. Okay, After Dow Jones, it was the editor was William. Sorry, Hamilton, William Hamilton, and after William Hamilton, Robert Rhea was the editor of Dow Jones newsletter. Okay, so basically, Robert followed the work of Dow Jones, Dow only. Okay, so as per Dow and as per Robert Rhea, okay, there are three types of trends. Now, understand one thing that uh, they define it in three categories, but there are multiple trends. Okay, this is just for you to understand, because if we don't give them a number, then how many trends will you see? Okay, so first let me explain you these three trends, and then I'll explain you multiple trends as well. Okay, so primary trend is the broader bull market or a bear market, which generally lasts for very many years. Uh, like uh, like what we see right now in Indian markets from COVID bottom, we have seen a 4 years of bull market, right? So generally these are bull markets last for say many years, like 4 years. Like if we see the bull market of if I go to Nifty, so if I go, I'll go to monthly time frame. So you can see there was the data from Nifty is only from 1991 because NSE was not there before that. Right? So you can see from 1990, somewhere at 350, the market went to 1200. Right? So from 300 to 1200, this happened say around 2 years. Right? It must be from before that also, but what we can see here is say around 2 years, right? 1.5, 2 years. Right? So this was a bull market. Then there was, if you see, there was 6 to 8 months of bear market, and then again a bull market, which was somewhere. If you see, again this is happening. This is having a rectangle pattern, right? You see, this is a rectangle pattern where the market is almost the same levels, right? Then there was again a bull market from 2003 to 2004, 2008, right? So almost 5 years of bull market, right? And then there was 1.5 years of bear market, right? So these are longer term phases, right? You can see then there was a sideways market. Again, you can see a triangle here, right? Right. So this was a 5 year bull market, then again a 4 5 year of sideways market, okay, and then again a bull market for around 2 3 years, and then again COVID happened, then again a bull market of almost 4 years, 4 5 years, right? So these are primary trends, right, which last for years, right? But these trends do not happen without reactions, okay, because there's no vertical rise up or down, right? So rises will have, basically it's like going from one station to another. Say if you are going from say Mumbai to Delhi, so there will be stations in between. You'll stop at Kalyan, you will stop at Surat, you will stop at another station, right? So there will be stoppages in between. The same way, trends also have some bit of corrections in between. Right? So these are called secondary trends, okay, or secondary reactions, right? So if you see, if I take the trend say from here, right, it went up, then there was a correction here, say almost of around say 6 to 8 months. Then again a uptrend, then again in between, if you see there, you got a correction. These are primary reactions. Okay, so these are secondary reactions. Okay, so these are called secondary reactions. Okay, they are most deceptive, because uh, initially you will think that okay, this is like a bear market, right? It looks very small as of now here, but if you are really trading at that time, you will know that how painful this correction would have been, right? Right now also, if you see, it looks so small, right? Right, if you see, this is much smaller than this, correct? So right now, I'm sure some of you must be in pain, right? But if you see, the pain would have been much bigger here, right? The correction is much bigger here than what we have seen in the last 4 5 months here, right? So these uh, what we say, primary bull markets or bear markets do not happen in one go. They have to take stoppages. So these are like stoppages, right? These all are secondary reactions. Okay, and you will not practically you will not be able to identify whether this is a like if you see here. Okay, um, you can clearly after in the hindsight we can clearly say that this was a major correction, right? The market went down from 6,300 levels to 2,500 levels, right? So this was a bear market, right? But at this point of time, if you see the first initial movement of this move and this move is very very similar, right? One red candle, one green red candle, one red candle, one green candle, one red candle, right? Similar to that. Here also you'll see one red candle, say one more red candle, and then green candle, again two red candles, one green candle, two red candles, again a green candle, right? So if you see, till this point they are very very similar, but this turned out to be a major bear market, and this turned out to be a correction, right? So initially it will be very very difficult for anybody to identify whether it's a, bear market or whether it is a, what we say, a secondary reaction, right? So that is why we say that it is very deceptive. A decline in the bull market, or a rally in the bear market. So rally, in a bear market, if you see, if this is a bear market, there is a rally here, right? Since we are seeing monthly, this rally is not visible. But if I go to daily and see, there will be a very decent bounce right here, right? You see, this was the first one, and then a rally, right? Again a correction, again a rally, again a correction, again a rally, right? So from 6,000 levels, it direct did not went to 2,500 levels, right? It gave decent opportunities for you to exit or maybe create your shots also, right? So these are the places where you can take advantage of these places, right? As a good technician, a technical analyst, you will be able to take advantage of these secondary reactions. Usually lasts from 3 months, 3 weeks to 3 months. So generally, these secondary reactions are from 3 weeks to 3 months, in that range. Yeah. Then there are daily fluctuations. So every day price is getting traded, as I said. So market will move here and there, right? So these daily fluctuations will happen. Okay, these are called Charles Shaw used to call them as ripples. Okay, sorry, not ripples. Yeah, ripples, right? Yeah. So because they just come in and they go away. They are like bubbles. They come in and then go away, right? Very very fast. Okay. So these are shorter term price movements within a larger trends. So if I take like uh, like this is a, say, major trend, right? This is a secondary trend. But within this, if you see this 1 day move, 1 day up move, then another day down move, another day up move, right? So these are basically ripples, right? So few days it can last for, say less than 1 day also will be included. So intraday everything is happening, that also is included in this. And then say generally less than 1 week or 10 days or 15 days. So generally these are like less than 15 days movements. Okay. All of which may be in progress at one and the same time. You see, these three can happen at the same time. Like at this point, if you see, all three were happening together. The major trend was down, then the secondary reaction was up, and they were ripples. They were 1 day up there, 1 day down there, 1 day up there, 1 day down there. So all three were existing at the same time. Right? So they can exist at the same time. Yeah. But as I said, there are not three trends. There can be many trends. Say, initially, when Charles Dow used to see the markets, at that time there was not much noise. Okay, traders will be like long-term investors or medium-term traders, or then short-term traders. Generally, three categories you can define traders and investors. But now, with so many people interested into the markets, okay, there are some people who trade to capture the bid and ask difference, like that is the arbitrageurs. But there are some people who want to take shorter term benefits of the move, like intraday traders. Then there are some traders who are swing traders, and then there are some traders who are like long term investors, right? So all these types of people are working in the market at the same time, right? So that is why there's no just two three types of trends. There can be multiple trends, right? There can be a 5 minute trend. There can be a different trend in 10 minutes. There can be different trend in 30 minutes. There can be different trend in hourly chart. There can be a different trend in weekly chart, right? So what we can say is that even if you have to divide them, there can be n number of trends, simultaneous trends, which are there, right? So basically you don't need to worry about all these things. You have to focus on what time frame you want to trade with, whether you want to trade in 5 minutes, whether you want to trade in hourly chart, whether you want to trade it on daily chart, whether you want to trade on weekly chart, or whether you want to trade on a monthly chart. It is up to the trader, and because all types of traders are there in the market, what type of trader you want to become, that will be your choice,
Sir,
right?
sir, one question. Does
Yeah.
fractal also implies that if there is a triangle pattern, then there is a rectangular pattern, then sideway, then there is a possibility then this will repeat itself. Again, triangle, rectangle, sideways.
No, there is no sequence, predefined sequence of patterns. Okay, you cannot predefine them or predict those patterns. No. Okay, influence of different time frames on trends. Yeah. So say we said that there are three types of trends, and but I said that there are many types of trends. Okay. um Understand one thing, that all these trends influence each other. Okay, so the monthly time frame will influence weekly time frame will influence daily time frame will influence hourly time frame, and same way shorter time frames will also influence the longer time frame. Like hourly chart our hourly time frame can influence daily can influence weekly can influence monthly. Understand why that happens. Okay, see, this happens because the bigger the time frame, the bigger is the power. Okay. Generally, who will be buying for long term? Those who have big pockets, right? Something like Rakesh Jhunjhunwala or Warren Buffett, like that people, right? Which have bigger pockets, or like mutual funds, or like high net individuals, right? They generally buy for longer time frames, right? They are not affected by shorter term movements. At least they say so, like that. Okay. So if there's a bad news, right, and some say a person like Warren Buffett had bought something, it will not matter him, right? He knows that this bad news is temporary, and it will not affect the stock for a longer term perspective, right? So these longer terms, since they are defined by big pocket investors and traders, okay, they are more powerful. Longer term trends are more important and more powerful, right? But shorter terms are also important. Why? Because if there's a trend change which is going to happen going forward, okay, it has to happen from the lower time frame, right? It is not possible that a trend will start to change in our in daily time frame from up to down, but it will not be down in 5 minute time frame. That's not possible. First the trend will change in the lower time frame. First it will affect the 1 minute time frame, 5 minute time frame, 10 minute time frame. Stock will start falling if the prior trend is up. the stock will start to fall in say 5 minute time frame, and then it will continue the fall in 30 minutes time frame, then it will continue the fall in hourly time frame, and then it will show up on the daily time frame, right? So because trend change cannot happen without lower time frames, okay, it will happen from lower time frames. That is why lower time frames are also important. Suppose you selected to trade in weekly time frame, right? So a monthly time frame will also influence the weekly time frame. So if the monthly time frame is up, okay, so there's a higher probability that you will make money on the long side, right? But if say daily time frame starts to turn down, then it can be a point where the reversal is happening. Although the prior trend is up, but the somewhere the reversal will happen, right? So maybe the reversal is happening. Okay, it may happen, it may not happen, right? But just an example. So you have to look at lower time frame also, and you have to have a look on the higher time frame also. Longer time frames influence shorter time frames. So the bigger effect is that of the longer time frames. Uptrend in monthly chart will influence the weekly chart trends. Will show in the larger will show larger rises than declines. So if the longer term time frame like a monthly time frame is up, then weekly trends also will be bigger. The move on the upside will be bigger of the weekly trends, right? So you will get if even if you're trading weekly, you will get the benefit of longer time frame because the longer term frame is up. Okay. Downtrend in the monthly will affect the weekly trends and will show larger declines than rises. So if you see like the same thing, okay, if I go show you the same chart of say Tata Tech, okay, if I show you the monthly chart, what is the trend of the monthly chart? Down clearly, right? Okay, and if I go to weekly, okay, so in weekly, if you have shorted it, you would have a bigger profit, right? Correct, because the monthly time frame was down, right, and that affected the weekly time frame, right? Shorter time frames act as early warning signals for trend reversal in longer time frames. So any reversal which is going to happen will happen on the shorter time frames, right? So they are also important, and they give you early warnings of a reversal. Okay. A daily trend must reverse before a weekly trend. So it's not possible that directly weekly trend will start to reverse. First, it will have the effect on a daily time frame because the movement of a shorter time frame is the building material for the larger time interval, right? So the movement of the shorter time frame will only be with the will be making the longer time frame. Like if you have to construct a building, you have to start with a brick. You directly cannot start with a floor, right? A floor will be made by a brick, right? So bricks are also important. Okay, so if you see here, they have given us a chart. This is a monthly chart, right? If you see the monthly chart trend is up, you can see the weekly chart also is showing you that uptrend. So you can take bigger profits if the monthly chart is positive. You can take bigger profits on a weekly chart, right? And then these are the corrections, like a secondary reaction, right? This is the secondary reaction which you can see on a weekly chart also, right? But here you can see that it came down, came up, and then came down. Here you can just see there's one candle, right? So the noise got reduced, right? There was more noise in weekly chart. Here there's less noise in the monthly chart. But if you go to the daily time frame, this is the daily time frame. Now again you can see this is the same chart. Everything is same. That only the time frame is different. You can see that you would have captured even in a daily time frame, you would have captured the major trend, okay, because the weekly and the monthly chart were trending up, right? And there's a correction here, right? This is the same correction what we are seeing here. This is a one month correction here. You can see this in weekly also. You can see this is the same correction on your daily chart also. Same way, this is the same correction as this one, right? Here you can see that there's a clear identification of the correction here, right? So they are connected. Okay, don't think that weekly chart will be different, daily monthly will be different. No, they will ultimately be the same because they are made of each other, right? This demonstrates how trends of different lengths exist within the larger time frame simultaneously. You can see all three trends are happening there, are there at the same at different intervals. The same trend is being visible, right? Yeah. Okay, there are some questions here. John has given his introduction. He's working in a government sector at Discon. The reason I'm here is because I love seeing what, I'm not sure, but maybe the technical analysis. Okay. Jiteshwar, which one is the best? I'm not sure what are you talking about, but maybe you're talking about trends. So the bigger the better. Okay, but it will ultimately, as I said, it will depend upon your risk appetite and how much profits you want to take. Right. The bigger the time frame, the bigger will be the risk. The bigger will be the returns. The shorter the time frame, the shorter will be the risk, and the shorter will be the profits as well. Right. But there are ways of increasing the returns and not increasing the risk. As going forward, we will see some of those techniques. We'll cover that as we go forward. Okay. Support and resistance, definition and role in trends. Basically, a support or resistance is basically uh, those levels where the price has halted. In an uptrend, it will halt at the top, right? That will create a resistance. In a downtrend, it will halt at the bottom, right? Or in the sideways, it will have both uptrend. It will halt at the upside also and downside also. Let's take a restock. Maybe let's take Mahindra and Mahindra. Mahindra Financial will also do. Okay, so you can see here. There's some sort of support here, right? Every time the price comes near, say, 260 levels, right? It gets halted somewhere. Like, it support and resistance are not exact prices. Okay, they are a zone, right? So you should always try to make like two lines. Okay. Um, so somewhere like this, right? So around 260 to around say this is around 255, somewhere there, right? So 250 to 260 levels is the support level. Okay. And similarly 300 to 310 is the resistance level, right? You can see at this range generally the stop price stops, right? So this is a resistance level, right? So basically these are your support and resistance levels, right? Those points where the prices halt, right? If you can see here also, right? It halted near to say 300 levels, right? So these are places of support and resistance, right? Support and resistance are key elements in trend analysis, represents uptrends, downtrends, and sideways market. So basically, you will see these support and resistance in all types of trends. Even these support and resistance mark you important points where the trend change can be identified, right? Suppose we say this resistance line was broken here, right? So the trend changed from sideways to up, right? So from here it went when it broke say 310 levels, right? It went to 340 levels, right? So these are the from these breakouts. Again, this is a breakout, right? So from these breakouts we can identify the trend, right? The trend, the breakout is up and on the upside, so the probable trend going up will be going up, right? here, if you see, there's a trend line here. You can easily draw this trend line, right? And there's a breakout here, right? This is a beautiful example of a breakout and then a retracement to the support level. So this was a prior resistance. Okay, the breakout happened and it came to this resistance level. And this the previous support, the previous resistance has now become support. If you see, it gave the same line. Okay, gave support here, right, at this point, right. Here also going forward, the same line gave it the support here. Again, here the prices came, it took support at these levels. So this is called law of polarity, where the previous resistance becomes support and previous support becomes resistance, right. Resistance, basically resistance is telling you the selling pressure, that selling is more than buying, right. So there's less demand and more supply, basically. Okay, that is where the prices are halting at these resistance levels, right. Highest price of the of a movement is called the resistance point, right. So generally this will be the highest point, right. If you see, after this fall, this was the highest point. Okay, prices came at these levels, took resistance, right. And again, this is a zone, this is not exactly a point. You see, this is a zone, right. So they took resistance here. On this day they took resistance, on this day they took resistance, again they took resistance here, again they took resistance here, right. And then ultimately it broke somewhere here, right. So these resistors are support levels. These resistors are basically those levels which are the high points, and it doesn't need to be the all-time high, okay, or it doesn't need to be a 52-week high, okay. So if the price is repeatedly halted near this level, forms a resistance. So when you see that the price are multiple times holding to those levels, then we can identify that this is a resistance. Now these resistances are difficult to codify. They are more easy to see them by on the charts. By definition, it is a price level where sufficient supply or selling pressure stops an uptrend. So where uh, the uptrend is stopped, where basically the highs are halted, and basically these will be the points of the highs. Right? You will always see the resistance by seeing the high. You will never see a resistance by seeing a low, right? So these are the high points where the price got halted, right? The price was not able to go up from that point, right? So these are the resistance levels. Similarly, okay, here we get a chart. Okay, so here, if you see, the price halted at this level, so this became resistance. Again, here also price halted. This is the resistance level, right? Here again price halted. This became the resistance level. Here again price halted. This is the resistance level, right? So everywhere where the price halts, these can be important levels, right? Same way when the price halted on the downside, when it is falling and it halted. So there was some buying which came in, right? So there's some demand which is coming here. So these are the support areas. Again, here price was falling. Somebody started to buy, right? Again, here same support level, almost at the same level. There's support, right? So those points where prices stop in the downtrend are basically support, and those points where the price halt in an uptrend is basically the resistance level.
Sir,
Clear?
sir, what the term you used when the resistance becomes support? Law of.
It's law of polarity. Okay, we'll be talking about it today only, right? Okay. Yeah. Here we talk about law of polarity, of principle of polarity. Same with support is where the buying demand comes, and buying is more than the supply, right? Or the buying demand is more than the selling pressure. This is the lowest point of the movement. Um, Generally, this is a zone. This is not a particular price. Okay, it will generally be a zone. Okay, if price holds multiple times at this level, forms a support zone. Right. So if the prices are getting halted at a particular level, then we can say there is a support there. By definition, a price level where sufficient demand, or what we say buying pressure, halts, and halts are downtrend. So when the at those levels where the downtrend halts, okay, that these are basically called the support levels, and may cause and may reverse it, right? So the fall happens and then it stops there and then starts to rise. So these are the levels where we can identify the support. Principle of polarity is basically what I told you, that it is basically support and resistance levels can switch roles once broken. So once a support is broken, it becomes a resistance, and once a resistance is broken, it becomes a support. Like I showed you here, I'll show you. This is a instead of resistance turning to be a support, and I'll also show you an instance where the support became a resistance. Okay. Here again, you will see this is a resistance level, right? Multiple time price halted here, price halted here, price halted here, price halted here. Ultimately it broke that, and when it came down again, this is like a zone, not a particular level, right? So it is somewhere, it is like a zone, right? So in future this area gave support also, right? Here also you can see perfectly at this point it halted, right? And there will be again instances. Okay, here it's not there. Let's go to some other stock. Any stock you can tell, no issues. Let's go to Lupin. Just daily chart. Okay, here's an example. Okay, so this was the price support, right? It halted here, halted here, halted here, halted here, right? Okay. Then once it was broken here, if you see, once this support was broken here, okay, the same support became resistance, right? It halted here. Again, this is like a zone, so it halted here, halted here, halted here, right? The same thing becomes resistance here, right? Broken support becomes a potential resistance, and broken resistance becomes a potential support. But also understand one more thing is that this law of polarity is there, but if you compare say a norm with a resistance level or a support level which doesn't has any polarity, those levels are work better than polarity levels, because many times what will happen is that polarity levels are also broken and they give whipsaws. Okay, let me show you. It's difficult to explain. But let me try.
Try HDFC Bank on daily.
What I'm trying to show you. Okay, this is a good example. Okay. So there's a resistance level here, right? It got broken here, correct? So we will expect a law of polarity, and this line should have given us some support, right? Although it did give support, at least on these two occasions, it did give us some support. Okay, but it was not able to give us support for a very long time, and ultimately it took support here, right? So what I'm trying to say is that law of priority is there. Okay, it does work, we don't deny that. Okay, but if you have to compare support from a resistance line, okay, and support from actual support from a line where it has taken support previously, like if you see this line has given support multiple times, right? So probability of this working is more than this working. Understand that. Like money will say that okay, this breakout happened, right? But and now this should work. But if you see also that uh, there's the difference between the price where it is here, it is very close to this resistance line, right? So law of polarity does work, but if you have a like support where, what I'm saying is that don't keep this line as your stop loss level. Okay, very people will do that. Okay, this is the breakout, now this has become support, right? Now I should keep a stop loss here. So this cannot be kept stop loss at least at this point. Okay, till the price goes further away from this, like once it has gone further away from it, then this will give support. But till it is very close to the price, you have to keep a stop loss say to the lower support levels only. Okay, that is what is important. Like don't keep a stop loss at this line. That generally will not work very well. Okay. Okay, they've showed you a polarity example. Okay, this is a weekly chart of say IBM, and on 10 weeks, 10 months, 10 years data is they've shown from 2014 to 2024, and 143.5 was a polarity level, what we can say. Okay, so if you see here, it was a support. It gave resistance here. It gave resistance here as well. It took support here. Again, took resistance here, resistance here, resistance here, resistance here, resistance here, resistance here, and support here. Okay, so this is a beautiful example. One beautiful example we have on Nifty. I'll show you that. Okay, Nifty. Okay. Yeah, you can see this line. There's a support here. There's support here, and if as of now you may not have done head and shoulder patterns, but this is a head and shoulder pattern, right? You can see this is a shoulder. Okay, this is a big head. You can see up till here or up till here, whatever. Okay, and then a shoulder, right? And this shoulder got broken here. So now this. Which was support now became resistance, right? So okay. And you can see it became resistance here, it became resistance here, it became resistance here as well, right? And here you'll see a inverted head and shoulder. Okay, you can see this is, you can say you can ignore this or you can start from here, whatever. Okay, and then you can see a big head here, right? And then a shoulder here, right? So this is inverted head and shoulder, correct? Right? And then again a surprise for you. Okay, it took support here, right? It took support here as well, right? Almost at these levels, say somewhere little here and there, since it's a zone. Okay, so it took support here, right? Again a head and shoulder. Okay, yeah, here, and here, right? Although this head and shoulder actually broke, if you see here, this if you see here, okay, if you see this low was 7927, right? This was 7916, right? And this was on the closing basis was 7908, right? So this close was lower than this low, the lower than this low. So actually, this head and shoulder got broken here. But since this was a big support level, okay, it took support here, and then the rally started from here. Okay, and this day, if you most of you may not remember, okay, this day was the Brexit day, okay, the famous Brexit, and this was also RBI policy day. We were trading at that point of time. If you can see, there's a gap down here. Yeah, there's a big gap down. So the market understand what happened here. Market previously closed at 8,270 levels, right? Next day, it directly opened at 8,029. So almost 5%, 3% lower, right? 8,270 to 8,000 levels approximately, right? So it opened that low, it went down initially, okay, and then recovered. By the end of the day, it closed at the top of the day, okay, and then it continued to rally from there. It was a very difficult day for most people who were trading at that point of time. Okay, this was like a price shock, and this was a demonetization day. You can see market open gap down on demonetization day, then recovered for the immediately in the day, and then again went down and went below the low of the demonetization low, but took support at these levels only, right? And one more surprise. Okay, the COVID low was also here. This same line gave support in the COVID fall. You can see 8,000 levels. It did went to 7,500 levels for one day. Okay. Only one day it closed below that. Okay. Only one day it closed below, or 2 days closed below that. That's it. Okay. Below the 8,000 levels, which was the support. Okay. Okay. So this is a most beautiful example of a polarity, law of polarity. Okay. So with this, we are done with this chapter. Any doubts? Any questions?
Brexit was the day when I lost biggest capital.
I told you that was a very difficult day for traders who were trading at that point of time. It was more difficult than the your demonetization day also.
Very true, sir.
Okay. You in the chart you will not see the pain of that day, of what people were doing at that point of time on that day. Okay, it will be just because it's happened, right? So the past data you can always predict, right? But in reality, next time whenever something like Brexit will happen, it will give you a different flavor altogether. So there's no substitute for experience, okay, in trading.
Right, sir.
Any doubts, any questions?
Can we quickly go back to 2017 December chart of Nifty that we were talking about, where we showed the head and shoulder pattern that failed?
2017 December is somewhere here. This was 2017 start, 2016 December.
Oh, sorry, 2016 December. Yeah.
Yes.
So at that point where we saw the head and shoulder pattern fail, much more recent pattern there would have formed to somebody else's eye would have been a double bottom. Would it be more reliable to trade a double bottom there rather than a head and shoulders, considering there was a major support?
Yeah. say it's anybody's eye. Okay.
Hmm.
I personally took a short trade on that day. I took a short trade here because for me, it was a clear cut breakdown, right? On a closing basis, it closed below these two lows, right?
Hmm.
Although I had seen that this major area is of support, okay, but still I ignored that.
Yeah, because that
Okay.
brings back to another question that the situations like these we often see more throwbacks and pullbacks.
Mhm.
So it would be more the lack of decision at that point in the market itself. Then might as well wait for a major movement.
Yeah, but
As a
see,
trader, I'm thinking the psychology of
yeah,
a trader.
it's difficult because at that moment in real life, okay, when you are trading, you have to see the risk reward ratio. Okay, I
Hmm.
always take trade when I'm trading manually. Generally, I trade with elbows only. But when I take manually like this trade, I did a manual trade. Okay,
Hmm.
so I only think about risk reward. If this breaks down, okay, then the downside was huge, right?
Right.
So it was worth taking a trade here. Although the stop loss was hit, okay, my risk, maximum risk would have been above this high. This is our stop loss, right? We know that. Like head
Right.
and shoulder, this is our stop loss, right? Shoulders head is our stop loss, right? So I was okay to take this much risk,
Right.
okay, and I
But
exited here.
if you were actually watching that, that could also be have been a contra trade at that point.
Sorry,
That could also have been a contra trade where your stop loss was,
no, I didn't took a counter trade. No, I
but
didn't.
could have been.
It could have been, yes. Okay. Generally in trading, we do take that you should take a counter trade in such cases because if a breakdown or a breakout is false, then the move from there can be huge. This was a false breakdown, right? And you can see the huge from the move from here was huge,
Even I have
right?
experienced that, so I asked.
Yeah. So generally, if a major breakdown becomes a failure, like this breakdown, I think everybody in the market was looking at. Okay, at that point of time, what I remember.
Yeah,
Okay, and when this failed, then it ought to have a very good move out from there. Okay. So you as a trader you should think in these terms, right? That is where your actual development will be. Right? Reading the books will give you the basic knowledge. Always understand that, right?
mm,
But your knowledge and will be your own knowledge only when you experience these things. Like first you will miss such things initially. Okay, whenever it happens with you you will miss some such things, but then you will remember that okay, last time it happened, so let me think and let me take with a limited risk how much how can I take a benefit of such a situation, right?
Right.
So that will come with experience only, nobody can teach you that.
agreed.
Like every experience is a learning.
Yeah, but you cannot have multiple mistakes, right? Because each mistakes cost you. If the same thing is happening again and again, then you'll have to find a way to stop it, right? Because every mistake in trading is costly, and it can be very costly. Okay,
Sir,
so we'll end up here, and tomorrow again we'll start morning 10 o'clock, right?
sir,
10 a.m.
sir, any comment on Nifty? You said that you
Yeah.
will.
Okay, so Nifty, what to say? I'm bearish. You see, there's a breakdown here with a gap, and 3 days of pause, it is not able to fill this gap. Okay, prior support has been broken. Okay, with a gap, so that is an important thing. In today's data is not updated here. Let me just update that. Okay. See, today's move is up again, up breakdown with a gap again. Okay, And I think mid cap also broke down the previous support with a gap. Uh, this is not showing. Yeah. Okay, so this was the previous support, right? It was holding it for 4 5 days. Here today it is broken that also, right? So mid cap has also broken. I think other indexes may also have broken. I've not seen other indexes. Not sure about Bank Nifty. I've not seen Bank Nifty. Let's see. Bank Nifty is also broken with a gap, right? I'm not sure whether there's a gap here. The low is 48,627 and the high is 45. Yeah, so there is a gap. Okay. So again, this was some sort of a support here. Okay. Which has broken with the gap. Okay. Although Bank Nifty doesn't look that weak, as weak is Bank as Nifty and mid cap is, but in Nifty, there's a falling wedge type of a pattern, right? If I remember these, and then, but that has broken on the downside actually. Okay, if you see, this is like a falling wedge pattern. Okay, and it is broken on the downside. So this is um what I would say extremely dangerous pattern. Okay, because if this happens, okay, and it broke on, generally it should move on the upside, right? A falling wedge pattern is like what we have understood in trading is that it breaks on the upside, right, in most cases, but here it is broken on the downside. So with my experience, what I say is that this happens only when it's a third wave. Okay, in Elliott wave, you'll be doing Elliott wave in level 3, level 2 now. Okay, I don't follow Elliott wave too much, but one thing I've seen is that such a breakdown of a pattern generally happens in the third wave of Elliott wave. Okay, so which we know that it's a brutal wave, right? Third wave is the most powerful wave, right? So today's move was like very very like it was bad for Nifty. Basically, it's not good for equities. Okay, and another thing which I follow is the breadth indicators. Okay, so if you see, I'll just show you simple patterns, otherwise you get confused. Yeah. I'll have to update this. Just give me 1 minute. Okay. And today was the end of the month and the end of the week as well, and it is broken down today, which is like bad. Okay, okay. This is updated now. I'll just show you 52-week high low index. These are breath indicators. Okay, sorry, I did it. Okay. Oh, this is surprising. Okay, if you see, this is basically what indicator. Uh, we know that 52-week high and low are very very important, right? So what we do is that we take we count the number of stocks which are making new 52-week highs, and we also count the number of stocks which are making new 52-week lows. Okay, so Obviously, if the economy is good, okay, and if the market is healthy, a lot of stocks should make new highs, uh, because earnings will increase, the price of the stock will increase, right? More people will buy the stock, right? So it should increase, right? But here right now, what is happening is that, okay, uh, most stocks are making new 50-week lows. In fact, today was the lowest of all in the last, say, since COVID. Today's we have made zero number of stocks which are made 50-week highs. If you see, this is zero. This green line is zero, right? Or I'll just show you. I'll put this and this one. Okay. This green line is zero, right? So yesterday there were, I think, two stocks, right? Two stocks which made new 50-week highs. Okay, and 75 stocks made new 52-week lows. And today there was zero stock which made 52-week highs, and 146 stocks made new 52-week lows, which is high, which was higher than this. If you see here, it was 128 stocks which are making new 50-week lows, on only one stock making new 50-week high. So this was a high. Now it is broken that also today, okay, which is very bearish. Say if the economy is doing good, then why are most of the stocks, and I'm talking about CNX 500 stocks, not your extreme small caps or macro caps. I'm just taking CNX 500 stocks. Right, out of CNX 500 stocks, 146 stocks have made new 50-week lows, which is like how much percentage? 150 out of 500 will be how much percentage? 30%. No, not, yeah, 30%, right? Around 30% stocks have made new 50 lows. If the economy is doing good, then why is that happening? Okay, it should not happen that way, right? So, I personally feel that the economy is in a bad shape. Uh, that is what the market is showing us. Okay. Okay. And if you see, say this indicator's reliability, why we should trust this indicator. Okay. If you see here, since COVID, okay, 4 years of bull market we have seen, right? This was COVID, right? Since COVID, if you see, once it went above 20, this green line is plus 20 mark and the red line is minus 20 mark. Once it goes above 20, which happens somewhere at around 10,900 levels, 11,000 levels, okay, it did not went below minus 20 till this point, till we saw this entire bull market, right, up to say around 18,000 levels. So from 11,000 to 18,000 levels, it never went below minus 20, right? It did give you a one whipsaw here, okay. Even if we take this level also, we went to around 16,000, 17,000 levels, right? In this entire period, it did not went there. Once it went below minus 20 here, there was a bear phase. It was not a bear market, but a bear phase, right? You can see it was almost 1 year of bear movement in 2022, right? And then again, it started to move higher. Again, here there was some bit of bear phase here again, okay. But then here from here on, if you see, somewhere in April 2023 till 2025, till here, it was not going below minus 20, right? And from this level, when it went above plus 20, market was around 18,000 levels, it went to 26,000 levels, and right now it is at 22,000 levels approximately, right? Here it went around this around 24,000 levels, right? In this entire period, it remained above minus 20, right? And now it is not able to go above plus 20. So till that time it doesn't goes above plus 20, it is dicey. There are other tools which can give us early indication as of now, but say this is something which is causing us to be bearish, okay. And if you see here, in COVID, when we went minus 20, when we went first time, when we went minus below minus 20, this was here at around 1100 and 11,600 levels approximately, right? And the major fall came only after that, right? And here also, if you see, once we went minus, say below minus 20 somewhere here, right? Although there was a whipsaw, I don't deny that, okay. There was when we went below minus 20 here, the major correction just started. Okay, I'm not saying we will see COVID type of fall or whatever. I don't know that as of now. but it's time to be bearish, not bullish. At least we see some sort of what we say bullishness in the market, right? The price is not showing that. Okay. And in this phase also, if you see before that also, once it went above plus 20, there was a bullish market, and it rarely went below minus 20. This was the point on the demonetization when it went below 20, right? Even in the breakdown what we saw, right, here there was it did not went below minus 20, right? This might be one of the reasons again why this breakdown did not work. Okay. Okay, here it went below minus 20, which was the demonetization day. Yeah. In Brexit also it didn't, I don't think it went below minus 20. It was see, if it was, breadth was in a bullish zone only. Right? You see the breadth was in a bullish zone only. And in this bear phase, you can see it did not went above plus 20. It was below the green line, right? In most of the case in this bear phase, right? And then if you see before that also, yeah, in this full bullish phase, it did not went below red line, right? Once it went below red line, that was a sideways or a bearish phase then. Yeah, so this indicator works a lot. Okay, I depend upon this indicator a lot. Okay, again here also, once it went above say plus 20 somewhere here, this entire rally started uh, from 6,200 levels till this point, 8,100 level. This entire rally was there, right? So it works quite well. Okay, with my understanding, even in 2008 fall also this had worked. Okay, if you see in 2008 when it went minus 20 here, right? Although this data may not be that much reliable because this is running, we are running on the current CNX 500 list of symbols, which may be very different at the time of 2008, right? But still we can see that once it went below minus 20 here, okay, it did not went above plus 20 in this entire for period. So if we have exited our position portfolio at this point of time when it went minus 20 at around say 5,200 levels, we would have been protected in this entire fall of say up to 2,500 levels, right? And when it went above this plus 20, here it went above this 20, we could have this we could have entered at around say 4,300 levels here, right? So this entire bear phase could have been ignored. Okay. And so this is something which I track regularly. There are many other indicators like these, which we'll be discussing as we go forward.